Hey everyone, welcome back to Corporate Decoder, the place where we unravel the hidden stories inside company reports. And today, Loop Industries is giving us quite the plot twist. We're diving into Loop Industries' latest 8K filing, and it's all about their annual meeting and what exactly went down with their voting. Think of it as the shareholder report card, and we're going to decode those grades. Before we get too deep though, if you like getting straightforward, no-nonsense insights from these corporate documents, make sure you're subscribed. And hey, we've got a growing community on Discord sharing their own insights, so definitely check that out. Link is in the description below. This whole report is basically a snapshot of a key event, the company's annual shareholder meeting. It tells us what happened there, who got elected, and what decisions were made. It's pretty much the official minute taking for big corporate gatherings. The real action appears to have happened on July 18th, 2025, the date of this big meeting. This is when all the voting and decisions were finalized. The company we're looking at is Loop Industries, Inc. They're incorporated in Nevada, but their principal executive offices are all the way up in Terrebonne, Quebec, Canada. That's a pretty international setup for a company trading on the Nasdaq under the ticker Vector. Let's talk about what these shareholders are actually voting on. The main thing at play here is the company's common stock. These are the shares that most people like you and me, if we invested, would own. They're trading on the Nasdaq stock market LLC under the symbol FAB. Loop Industries is also checking a box here that says they are an emerging growth company. This means they get to follow some slightly different rules compared to older, bigger companies, especially when it comes to financial reporting and accounting standards. They have the option to delay adopting new accounting rules. Now, this is where it gets interesting. The meat of the report is all about the voting results from their 2025 annual meeting. Shareholders get a say in how the company is run, and this section lays out exactly how that happened. The 2025 annual meeting of stockholders was held virtually on July 18, 2025. This means everyone participated online, which is pretty common these days. First up on the agenda, picking the people who will guide the company, the board of directors. 5 folks were elected to serve until the next annual meeting in 2026. These are Laurent Auguste, Spencer Hart, Louise Sams, Lawrence Sellin, and Jace Dabina. But wait, there's more. Daniel Solomita also joined the board, and his election was a bit different. It was based on the vote of the holder of the company's Series A PERD stock. This means one specific shareholder group had the power to put him on the board. With his addition, the board grew to a total of 6 directors. Beyond just selecting directors, shareholders also voted on some other really important stuff. They approved PricewaterhouseCoopers LLP books as the independent auditor for the next fiscal year. This is crucial for trust and transparency. They also voted on executive pay every single year, hence up to the compensation of the top bosses, and decided that they want to vote on executive pay every single year. Let's look at the voting for those director elections. Remember, these are the 5 elected by the general shareholders. For Laurent Auguste, a massive 98,969,148 votes were cast in favour. Only 13,967 votes were withheld, and there were over 5.5 million broker non-vote. A broker non-vote happens when the brokerage firm holding shares for its clients doesn't receive voting instructions, so they don't vote those shares. The overwhelming 4 votes suggest strong shareholder confidence in Mr. Auguste. Spencer Hart also won big with 99,041,598 votes for him, and a very small number, 41,817 were withheld. Again, we see that same 5.5 million plus broker non-votes. This is a clear endorsement. Louise Sams received 98,067,489 votes in favour with 115,926 withheld. The broker non-votes remain consistent, another strong showing of support. Lawrence Sellin garnered 99,475 votes for, and just 42,940 votes were withheld, with the usual broker non-votes accompanying. This indicates a high level of approval, and Jace Dabina also saw overwhelming support with 99,040,931 votes for him, and a mere 42,404 withheld votes, along with those consistent broker non-votes. The shareholders clearly wanted these 5 on the board. A whopping 104,594,262 shareholders voted to ratify 2C. There were only 14,238 votes against and 62,360 abstentions. This is almost unanimous approval, showing that shareholders have confidence in the audit firm. It's essential for a company to have a trusted auditor to ensure their financial reports are accurate and reliable. This next vote is about the pay of the top executives, often called the say-on-pay vote. It's advisory, meaning shareholders give their opinion, but the board makes the final call. A total of 98,437,462 votes were in favour of the executive compensation. However, there were 507 195 votes against and 195 votes against and 138 abstentions. Added to that, we again see those 5,577 voted or perhaps not tied enough to performance. Finally, the shareholders voted on how often they want to have this say-on-pay vote, every year, every 2 years, or every 3 years. The clear winner here is the annual vote, with 98,957,462 shareholders choosing to have this say-on-pay vote every year. Only 11,626 voted for 2 years and 39,009 for 3 years. Along with the usual broken non-votes, this shows a strong desire from shareholders to have a regular say in executive compensation. And wrapping things up, the report needs a signature to make it official. Nicholas Lafond, the Interim Chief Financial Officer, signed off on this report on July 22nd, 2025. This means they've formally submitted this information to the Securities and Exchange Commission. So what's the big story here with Loop Industries? Well, the shareholder meeting shows a pretty strong endorsement for the current board members and for keeping PwC as their auditor. That's generally a good sign of stability and confidence from the owners of the company. The advisory vote on executive compensation, however, did have a notable number of dissenters. While the majority approved, a decent chunk of shareholders expressed some reservations about how the top brass is being paid. This could signal that the company needs to be more transparent or perhaps reevaluate how compensation is tied to performance to satisfy a broader base of investors. The shareholders' clear preference for an annual say-on-pay vote also indicates they want to stay actively involved in overseeing executive pay, which is a healthy sign of shareholder activism overall. Loop Industries seems to be navigating its governance smoothly, but there's always room for improvement, especially in aligning stakeholder interests on executive compensation. What do you think about these voting results? Do you see the dissent on executive pay as a major red flag or just a normal part of shareholder democracy? Let me know your thoughts down in the comments. If you found this breakdown useful, smash that like button and don't forget to subscribe for more corporate deep dives. And seriously, hop into our Discord community if you want to chat about these filings and more. Thanks for tuning in, and I'll see you in the next one.